you're a property manager or landlord and you're mixing rent money with your own money, that's not just messy bookkeeping. That can actually get you into serious trouble. I'm Peter Fider, CPA and founder of Meeple Accounting, where we help property management companies eliminate trust accounting risks through clean bookkeeping systems. And I see this more often than you think. Rent comes in, security deposits come in, and everything just goes into one account. But here's the problem. You're not just dealing with your money. You're handling other people's money. This is what makes property management different from a regular business. You have to think of it that way. It's different. When you collect rent or a security deposit, that money belongs to the owner of the, or it belongs to the owner, or it belongs to the tenant, not you. You're just holding it. You're responsible for it. And when you mix that with your own money, that's where problems start. Let's make this really simple. This is how it works in most property management setups. Operating account equals money moving. This is your operating account. This is where money flows, rent comes in, management fees are taken, expenses get paid, owners get paid. The second one is the security deposit account, equals money held. Security deposits are different. They are held separately. They are not used for operations. They stay there until tenant moves out. Operating is for money moving. Security deposits are for money being held. You don't move rent money into the security deposit account. And you don't use security deposits to pay expenses. Don't do that. Now, this is where someone might challenge this. Some systems like Buildium or Appfolio can use one trust account, but track tenant deposits separately in the ledger. And from a system standpoint, that can work. But best practice, and in many cases, what's required is clear separation or proper segregation of those funds. That's why many property management companies still use separate accounts for clarity, for compliance, and to avoid problems. And depending on your state, there may be specific rules on how those deposits need to be held. So, you know what? Make sure you're following those rules. This isn't just about being organized. In many cases, this is about compliance. There are rules around how you handle tenant deposits. And if those funds are mixed or misused, you're in trouble. You could be violating those rules. Let's say a tenant moves out and expects their deposit back, but the money isn't there. Yikes. Because it was used somewhere else. Don't do that. Now you've got a problem. From an accounting standpoint, this creates a mess. I'm an accountant. I don't like that. You now have to figure out what belongs to the tenant, what belongs to the owner, and what belongs to you. And when everything is mixed, that becomes very, very hard to track. This is one of those things where you might get away with it for a while, but all it takes is a tenant dispute, an owner asking questions, or someone reviewing your books, an auditor, and now everything gets exposed. You really don't want to be in that position. In my last video, I talked about separating business and personal accounts. This is the next level of that, separating types of money inside your business. If you're not doing this yet, start there, or I should say start here. Separate operating account, separate security deposit account, or clearly segregated system. Track everything properly. This isn't complicated, but it is very important. If you found this helpful and want more content like this, it would really, really mean a lot to me if you like and subscribe. It really helps the channel grow. This is Peter Fider. Thank you for joining me today, and I'll see you on the next one.